And historically, although that, a lot of people are concerned after that it must mean things shift. Historically, actually, more often than not, that means another good year ahead. Happy Thursday. We have a big week here this week in terms of data for signs of what to expect from the upcoming Fed meeting here at the end of the month. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out some of the noise along the way. And again, this week was a big week in terms of data points of what to kind of watch for in the upcoming Fed meeting. So what I mean by that is the Fed's mandate as a quick refresher is, let's call it threefold, but really there's two things that they're really watching, which is employment and inflation. The third is, balanced markets basically. But let's focus on employment and inflation because those are the two data points that we really have received over the last 7 days or so that I want to highlight. So going back to last week to start, we'll kind of touch on the employment report. We started jobs week there earlier in the week last week, but of course, every Friday we also get the employment report. And so on Friday, we got that out as well, non-farms payroll, and it added 256,000 jobs for the month. So this was much higher than expected. And I'll hold on how that translates to the Fed here in a minute so I can wrap this all together. But nonetheless, higher employment report than expected. And the second big data point, or the second mandate from the Fed, of course, is inflation. And so we also got inflation numbers out here this week. We received producer price index and consumer price index. And I'll spend a little more time on the CPI part of it. But the producer price index expectations were actually really high for this past month. So PPI came in at 0.2% and core PPI was 0.1%, which was actually quite a bit less than expected, again, because those expectations were pretty high. Now, that said, we also got CPI data. And again, this is consumer price index. Still very high expectations as well, but quite a bit of different story on the numbers that came in. So we had CPI come in at 0.4%, which was a big number for sure, and core came in at 0.2%, so much more digestible, but nonetheless, the CPI number was quite the surprise. If it helps, this moves the CPI number year over year to 2.9%. And the core year over year to 3.2%. So, obviously when we talk about a 2% Fed inflation target, still a far cry from where they'd like to see it. Although, obviously there's been talks of claiming victory on that. And the reason I want to highlight all of this is to come back and kind of wrap this in a nutshell, because these are important data points just in and of themselves. But of course, the focus for as long as I can remember at this point has been around the Fed. And again, if their mandate is jobs and inflation, what this would suggest is that the labor market is strong. We're seeing a lot of jobs added. Inflation is higher than expected. And so when the question comes up of what the Fed may do ahead, this would suggest that the Fed might consider a pause sooner than later, basically, is the long story or the short story of this, right? Again, to cut rates when inflation is picking up, that would kind of go against the Fed mandate on inflation. And then to cut rates when the labor market is adding a lot of jobs would be the same as well. So generally, when we cut rates, when the Fed cuts rates, I should say, the idea anyway, is to spark economic activity. And, and what they've been doing to raise rates is supposedly to decrease inflation. Obviously, this would suggest that there would be, pause for concern here on cutting rates further at the moment. So in the January meeting, it's still very possible and maybe more likely than not that they do cut by 25 basis points. But, the data point here most recently suggests, again, that a pause may happen sooner than later is kind of the short version of things. I also do want to touch this week on a question of the week, just briefly touching on 2025 market outlook. But before we jump to that, just a quick update for what to expect here next Thursday. As a heads up, markets are closed again on Monday for MLK Day, but we do have some data to cover around housing and then leading economic indicators that we'll all touch on next Thursday. But before we break for the week, question of the week is really just a great one with the timing, obviously, to start the year. Just a brief outlook on 2025 and what to maybe watch for in the markets. What I'll share is we're actually doing a client event here this evening, so I'm going to keep this really high level, really brief, but hopefully this is still helpful. There's a few things that I think that we're really watching in the year ahead. Overall, I think that we expect it to be a decent year in the markets. We're coming off the back of 2 really strong years in market performance. And historically, although that, a lot of people are concerned after that it must mean things shift. Historically, actually, more often than not, that means another good year ahead. Now, that said, we've started the year with some choppiness, and we expect that throughout the year, there will be kind of bouts of volatility. So I don't think it's going to be quite the simple ride, but nonetheless, we do expect a good year, maybe just not quite as strong as it has been in 23 and 2024. But I think the big thing to kind of keep an eye on here is just where money is allocated. I don't think that what has worked historically is necessarily what's going to work moving forward. I think that as we see valuations, it may take some time for earnings to catch up to them, but there are certainly undervalued companies out there. And so this may be a good time to explore your allocation and make sure that you're kind of trying to find those opportunities as well. But nonetheless, that's kind of our high level view, at least on the stock market in general. Hopefully that helps. We can certainly break that down maybe a little bit further if that would be helpful. But again, we do have a client event tonight, so we will be getting into a lot more detail there. In the meantime, have a great upcoming weekend, and we'll see you next Thursday at 3.